man, so Bitcoin starts off the week with a flurry towards that $25,000 mark. Bitcoin dominance is climbing as altcoins look to Bitcoin to break this critical level. Will this be the week we get this break and finally move into some green grass? We're going to analyze the key levels in this chart. There's a few interesting and important patterns that Bitcoin is forming, and we're going to touch on altcoins and the dollar index as well. But first, guys, I need to show you, I've been inspired by KSI and Logan Paul. You guys have seen the success of their Prime Energy drink, I'm sure, guys. So what I've gone and done after the Coty video yesterday is I've gone and launched our new range. If you can see here, it's called Moon Boy Tears. Yep, this is going to be available, guys. Moon Boy Tears. I think it's going to be an absolute hit because we've got to keep drinking those Moon Boy Tears as we head straight back into the chart. And Bitcoin is here, guys, forming a very important ascending broadening wedge, right? Here on the 4 hourly, we've been monitoring this. We ran from the bottom of the wedge all the way back up, got rejected from that 25,000 mark, but we're spending more time at the top of the wedge. Remember, if you spend more time to the bottom, more likely to break to the downside. Spend more time at the top consolidating, more chance you can push through. And remember, the price target from this gets you into that 30,000 range. We've spoken about that a lot of times, whether you look at the Bollinger Bands, whether you look at the EMA ribbon, whether you look at the volume profile, VPVR, you see that there is a clear gap that we can start filling up towards the 25,000 mark. Now, if we also take a look at the other pattern I shared with you guys last week, was this head and shoulders pattern that was forming. Now, it is continuing to form. You can see we're trying to break out and retest this neckline, but if we can start punctuating this move, again, where does this head and shoulders price target give you? It gives you in the same range, around that 30,000 mark. So 29 to 31,000 range is definitely in play here. But this level has to be cleared. This is the level from August 2022. We have to break through this meaningfully. And then there's this big gap to fill where we collapsed from that range of around 29 to 31,000. We should be able to get back into that range once we clear this tough line. But it's not super easy to clear this. There will be work that's needed to be done. The other pattern you can see forming here on the 4 hourly chart is a bull pennant or bull flag. So you've had your move here. You can see that this bull pennant is playing out. And again, if you wanted to take the conservative move, I mean, you could technically take it all the way from the bottom there. I'm just going to take the move from there and I'm going to apply it at the point of the breakout. Again, if you're unclear on how to do these things, ijaz.uk/TA, completely free TA course. Go check it out. You'll learn all these different patterns and more. Plus you get a crib sheet with all the patterns for free as well. So this again brings you up to that 27, 28,000 mark. So this is the pattern that will need to play out in order ascending broadening wedge to break out. So if we can break out this pennant here, which I just showed you, that will then give us the bigger breakout of this ascending broadening wedge, okay? Which in turn will have the daily chart head and shoulders playing out as well. So everybody's looking to that to play out. And there's been one fundamental shift which I need to share with you. Because all this time, our narrative has, rightly so, been around the US, their tightening of monetary policy. When are they going to pivot? When are they going to U-turn? And that's going to signal the start for crypto. And you have to remember a few things. The markets are looking to price in levels of certainty. They don't like uncertainty, they love certainty. So they're not going to wait for clear data of a U-turn. They start pricing in. Money starts to flow back in. So for anybody waiting for a binary outcome, like it's a light switch, and when that switch is turned on, now everybody is accommodative and off we go to our bull run. It doesn't work like that. The money starts loading in, as you've seen. We've already moved from 15,500 to knocking on the door of 25,000 here on Bitcoin, and it moves quickly. But I need to share this with you. China is the odd one out. When you look at the EU and the US, you can see that China is an outlier. So if we just had news last week that China kept its benchmark lending rates unchanged for a 6th straight month, okay, as they start to show more signs of recovery post their COVID zero strategy, fine. So they kept their 1-year prime rate at 3.65, they kept their 5-year at 4.30, and look at this from an analyst at Barclays. He says, we expect the PBOC, which is the Bank of China, to stay accommodative in the first half of this year, but only through liquidity-related actions. I'm going to come on to that. Not cuts. What they're saying is we expect them to continue to be accommodative. Now, everywhere else is not accommodative. They're tightening, okay? They are hoovering money out of the economy. But what are China doing? China are having relatively low inflation and relatively lackluster economic activity. So they need to stimulate economic activity. No different to how many governments had to do through the pandemic period. China needs to still do that. So if you take a look here, China's central bank ramps up medium-term liquidity injection via policy loans. So now they are using monetary policy okay, to loosen. So they're not tightening, they're loosening. So when other countries are tightening, they're going ahead and stimulating their economy. So you can see here, China's central bank ramped up medium-term liquidity injections as it rolled over maturity policy loans on Wednesday. So if we take a look at this, they're keeping the rate at 499 billion. But the bit I wanted to share with you is this. The net outcome is 199 billion yuan of fresh fund injection into the banking system, and then they injected another 203 billion yuan through 7-day reverse repo. No means am I saying this all goes into crypto, but the point I want to make here is that you have got China, a major economy, currently loosening monetary policy or keeping it accommodative at least, right? That's what we're seeing. So they are stimulating the economy. They want better economic activity. They want better growth. Now, in our world, when we look at the EU, when we look at US, we're thinking, oh wait, everybody's tightening. Therefore, crypto can't go on a run. Crypto can't go on a run, right? We're tightening. There's a, we're hoovering up money from this economy. But you got to remember, there's China to play as well. So there is money coming into the system, and that money is going to be allocated somewhere. By no means am I saying it's all going to go into crypto, but there is money available that can start to flow into crypto. So we have to keep an eye on this narrative. Now, if we move on over to the Fed rate monitor tool, it's interesting that we've seen a slight shift. And by the way, this week is a critical week. To give you context of what we've got going on this week, on Wednesday, we've got the FOMC minutes. On Thursday, we get Q4 preliminary GDP figures. You've also got your initial jobless claims on Thursday as well. Friday is a big day. You're getting your PCE inflation, which you remember is the preferred inflation figure that the FOMC use. Their next meeting is in March, and they're going to be using that data. Very, very important. Does it back up what the PPI told us and the CPI told us in that inflation is still pretty hot? We've then got Fed Jefferson speaking and Fed Mester speaking. So a bunch of stuff going on, plus the Michigan Consumer Sentiment Survey and personal expenditure reports. We will be looking at that. A lot of macro data this week, which will have an impact on the markets. Now, speaking of the markets, what do we see here? The market is currently starting to change. We've been monitoring this very closely. Now, close to 20% of the market is pricing in not just 25 basis points, but a 50 basis point rate hike at the meeting on March the 22nd. This is a very big change. We've seen that the terminal rate being projected has started to climb closer to that 5.3 range when it used to be about 4.9. So people are expecting us to rate hike to a higher amount, the higher terminal amount, and stay there for longer. So if you look at what's being priced in, you can start to see that shift happening. Now, I do have to bring your attention to this dollar index because the dollar index has reclaimed its daily EMA ribbon, okay? This is an important level here because ever since we broke down properly from this level back in November 2022, the dollar index has been falling, and that has allowed us to consolidate on Bitcoin and get a quick recovery here to start off 2023. Now, remember, this is inversely correlated to Bitcoin. That being said, over the recent period, and I'm talking the last week or so, we've started to see early signs of decoupling. Maybe this China narrative is adding to that as well. That's something for us to consider as well. Could that be the reason that we're starting to see this decoupling where even if traditional markets are falling, Bitcoin is like, nah, we want to move. We need to get past 25 and we need to take this to the next level. So we need to keep an eye on that because traditionally what we're seeing is if this starts climbing, if this reclaims its EMA ribbon properly, bounces from here and starts working its way back towards, let's say, 105, that's historically not great for Bitcoin over the last year and a half. But the last few days, Bitcoin has ignored this, right? So you've seen green days where dollar index has been green, but Bitcoin said, we're going to be green anyway. And it's continued to move. Quick glance at the altcoins and straight away you can see a huge bubble for CFX. Not a project that has been hugely on my radar, but I did take a quick look and you can see that it is a project which is now sitting at 600 million in market cap. Not too shabby whatsoever. Fully diluted 1.5. So this is not crazy cheap anymore, but it's done a 4x, a 400% plus in just a very short time frame. If we take a look at the website, you can take a read of what they're trying to do. Blockchain without barriers, high throughput, secure, interoperable, built-in staking, scalable, low fees, all the different things. And what's interesting is if you start to read, they did do their hard fork back in December 2021. It was quite interesting to read this. So definitely go have a read of this as well, the way they're trying to use almost like a hybrid proof of work, proof of stake, but definitely one which I will probably need to do a little bit more research on. It's quite interesting to see this move. If we take a quick look, you can see that it's just gone absolutely berserk here. I mean, absolutely huge moves here. If you go back to the 15th of February, so just in the last 5 days, you can see it was a 64% day, followed by 48% day. Then it had another 10% day. 2 days ago, it had 45%, and today it had 26%. Insane movement here. by CFX, and definitely one. Congrats if you guys picked that up. That was definitely not on my radar. CFX. Fear and Greed Index sitting at 58. Again, not too surprising, right? The market's just sitting there, just on the borderline of greed. You can still feel a little bit of that froth in the market by the movements of different altcoins. You can see that happening. And what's worrying me is we've not had a serious little pullback. I mean, ever since our run, the bears have shown a lot of weakness. I've been really surprised. I'm going to come on to that shortly, but don't be surprised if Bitcoin clears that 25,000 range this week. That greed's really going to come in. If we head back to Bitcoin, you can see that once we clear this 25,000 mark, the volume does kind of disappear until 30,000 again. You can see these small volume profile candles versus the bigger ones here. This is very hotly contested area, and then it kind of eases off in this period. So this is where we want to see a big move and expect fear and greed to start notching up there. That being said, let's remind ourselves, let's give ourselves a little bit of, you know, moon boy tears and understand that there is risk involved. That's what this channel is about. I'm not going to pump everybody and say, go, off we go, we're going to 40,000, we're going to 50,000. Like, let's be patient. Where are we at? I said very clearly, I want to see this EMA ribbon reclaimed on a weekly candlestick. We've yet to do that. But at the same time, guys, this is really good. This candlestick closed yesterday as a bullish engulfing candle, a very nice bullish engulfing candle. We've had a really nice 4-week extended move into our EMA ribbon. The bear stepped up for 2 weeks, okay, and retraced us slightly down here. Just pushed us down here. You can see they pushed us back down about 11-12%. But look at that. We pretty much took, we took back the last 2 weeks worth of gains in one weekly candle, okay, last week. Now this week has opened up green as well so far. We need to see a close above this EMA ribbon. That is going to be very important. Let's call it 26,000 to just confirm that 25,000 is done. A weekly candle close above there, and we've got our weekly EMA ribbon back. Now, ideally, you want to wait for the candle after the close above as well, because look what happened here. We closed above it. We showed a doji candle, which again, we go through on our TA course. A doji candle signals a reversal. So at this point, if you went long on this position here, and then you saw this doji candle print, you would panic. That's showing that you've just got caught in a bull trap, and then it got thrown big time to the downside. So be very careful. Be very careful if you're trying to time your way into the market. Do not chase green candles. I mean, if you were holding through this period and DCAing like I've been doing, then of course you're fine. You just sit here and enjoy the moves that the market is taking. But here, I'm not chasing green candles. For me to do my next bit of DCAing, I want to see, do the bears step up and try to push us back down again? Will they try? Will they send us back from 25 and say, go try again? Because if we look here at the 4-hourly chart, what do we notice? We notice a few things. Well, let's just drop that down to the hourly actually. We tested it once up here, came back down, tested it again, came back down, tested it again, right? But if you look, we're creating higher lows, this low and a higher low. We're really pushing to try and get that 25, and the bears can't get any reprieve at the moment. The bears pushed all the way down here to 23.5, and then here they could barely push it anyway. Then they had a big push all the way here down to 23,800, and the bulls stepped back up again, right? So the bears need to regroup and try at least push this down to some significant levels down here. Ideally, they want it back down at 22,000. So far, the bulls are showing strength, trying to recapture this important $25,000 level. It's a really important week in the crypto markets. Will this officially be the week we get that $25,000 mark back on Bitcoin? As mentioned, this $25,000 mark is that roadblock that the bulls will want to reclaim immediately, and the bears will not want to give up. They will be keeping their final resistance there because they'll know just as much as the bulls know. Breaking through 25 gives you a clear path towards that $30,000 mark where the next support resistance levels lie. So there you have it, guys. Smash up the likes. Don't forget to subscribe if you appreciate these kind of updates. Go watch my Coty video, which created a whole bunch of drama for whatever reason, as my previous video yesterday, and I'll see you in the next one.